Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, market gap down for what, the fourth, fifth day in a row, and the trade's been really the same. At this point, I think that people really are embracing the fact that we're in a downtrend, that we're not going to all of a sudden be off to the races anytime soon. But if you have to be here and you have to trade, you have to do it in a way that is strategic. And the last 2 days, if you're a cash flow type trader looking for, trades versus levels, you've had some opportunity. Yesterday we were looking at 135.76. It traded below it, gave you a nice meaty short. Then it got back above it. Big travel ranges, key stocks made you some money from the long side. Even today. So if you took some overnight, today we gapped down, which had no follow through to the prior day. And then with a little bit of time, you had another nice trade. It went through yesterday's low, came back above it. You could have put the stop in at the low of the day. Key stocks from yesterday, if you took them home and you gave them some time, they all went positive. They all gave you a way out to salvage the trade. If you're in some of the wrong stocks that aren't strong, that are technically weaker, you don't get the luxury, or sometimes they don't give you a way out. So if you take a quick look at the spiders, you will see, overall, it's very difficult, right around here, where it keeps trying to press below and come back above. It's pretty, I'd say it's pretty frustrating if you're a short and somewhat of a long. If you look yesterday when we broke below this area, which was 135.76-ish, it broke below, gave you a short and then another long. Today we broke below 134.92, which was the pivot, which I talk about. I kind of mentioned that I'm not looking for the short side from that, because I just don't think it's going to be as easy as it was here. So this time I just waited for it to break below, come back above. So I went long some spiders. So that was pretty much where I made my money from 134.92. They went as high as 136.60. That's $1.50 in the spiders. So if you're a professional trader and you're looking for cash flow, not so bad. If you're trying to short this market, the whole thing is from, I guess, 141.66 down to here. Down here is a tricky area unless you're really, really committed to it. And you say to yourself, okay, here's the thing. You go, I am strong enough as, so if you come to me, if you're a bigger fund and you're saying to yourself, we're about 5% off the highs, I know we're going lower, that's my conviction, okay? And you can handle it. You're probably shorting rallies, you're staying with it, and you don't care about the ebbs and flows that have been going on here. And you're probably saying to yourself, I'm going to stay the course like this. It could be 2 weeks, it could be 6 weeks, whatever. That's an opinion, that's an idea, and perhaps it's right. And in my opinion, I do think that at some point we're going to grind down to 1,300, 1,320. So I'm not looking to take on any big size. I'm just looking for intraday strategies. So today, again, there was a decent cash flow long, on the spider side. So if you go back to the spiders, you will see, here you go again, you go to your 3-minute chart. Okay, it's this morning. It's pretty damn calculated also, right? We gapped down, okay, it couldn't really rally. Then we broke below that low, right? And then we came back and it, pushed through, held higher. Okay, and then really, if you missed the re-entry right around 134.91, when it pretty much broke this area about 135.40, that was your entry for what was a decent move to almost 136.20 or so. So right here, that's like 60 cents in the spiders. So if you're trading stocks, I'm sure the stocks did much better. And then, that was the trade that I was looking for. I kept some on, and then all of a sudden, what did it do? It came back, retested this prior breakout area during lunch. Put another little, just say, descending type of channel here. So if you drew this intraday, you could either bought back here or rebought on this entry, okay, right around 135.80, and then it made a new high all the way up to fill the gap at 135.60. So there you go. By 130, gap was filled. So if you came in flat today, you had a nice little 80-20 trade. Here was a potential add. Then even here too, you had one little extra add where it flagged, didn't pull in, was looking strong at 11.30 for an additional, I would say 30 to 40 cents. And then it just started to get out of play and do what the market does in the afternoon, and just become a chop mess because everyone's scared about what's going to happen overnight. So with that said, there was money there. Okay, everyone also knows that I've been focusing on Apple. I'm like, as long as we stay above, the 560 or 558, even 555, let's try and be long, look for relative strength. And, there was a decent trade there also where it went from negative to positive. It diverged with the futures, and then it gave you a little trade through that 572, but the market's not ready to reward buying for momentum levels. Right now, when you're in a corrective phase, you could buy into the hole. You could also cover into the massive pullback, and then you played for a move, but then if you add to it, you're not getting as rewarded. So if you look here on Apple, here's your chart, a little bit different. All right, here you go. You had actually like two trades here. One, it opened, didn't make a low, and filled the gap real quick. I think I was trying to talk the virtual trade floor through this, and guys made some pretty significant money. And then it tried to flag when the market went and made new lows. It came back down. It made a new low, but not by much. But what it did is it held above yesterday's low. So take another time frame look at it. If you go to the 13-minute chart, okay, this was today. So look how Apple held above yesterday's low. So right there was a mini divergence to say, okay, Apple's holding up stronger. Stay with it, because if you go to the spiders, you will see at that time, spiders here made a new low. So spiders make a new low versus the previous day. Apple does not make a new low here. Okay, it actually made a higher low. So that gave you some confidence that it's showing relative strength. You probably can go with it. So you go back to the 5-minute chart to trade it. And where I made the majority of my money was probably right around here. Okay, right around when it started to cross above this 568. Okay, crossed above 568, saw the prior high, pulled in, didn't pull in much. And then, if you look at this move, another nice little move through 570 all the way to almost 574. So you have a lot of different trades. You had right here, once it didn't make a new low when the spiders did, okay, versus the prior day. Then when it broke this little downtrend, so you could have been a little early around 564, 565, or then when it held in and you went versus the prior area here and it didn't pull down. So 568, you could have then made your $6, and then there was really nothing the rest of the day, just like the market. A lot of guys gave back a lot of money in here, me included. But anyway, that's what Apple did. If you look at LinkedIn, pretty similar. You look at Google, pretty similar. The banks weren't as strong. They got a little stronger during the day, but there was nothing so crazy there. LVS also, choppy, but there was a trade there. You want to look at how this worked itself out also. This this really made the new low right here. So from there, it pretty much broke this little downtrend from the open. So this could have been your area. And I guess there was another little trade when, broke above 51.40. You look at the daily chart, it's still not acting great, but it's trying to make its way down. It also traded below the prior low, 51.03, went as low as 50.64. So when it went back above 51.03, you could have bought 51.03, put a stop here at 50.64, so that's 40 cents. And then it went as high as 52.16. So you had a 40-cent risk. So if you just collect this a little bit, there was a 40-cent risk here because you bought it when it recrossed this for what wound up being a dollar move. And if you're actively trading, that's all you could expect. The gold miners early on showed some strength, and they've been just battered and bruised. So that gave me a little bit of, an inclination to trade GLD. I haven't done it in a while, but it was worth a trade, and I made some money. It wasn't a blockbuster trade. There wasn't a lot of energy there, but I think if I remember, we were buying. Let me put it up there because then I'll remember the numbers a little bit more. I also tweeted about this. You go to the 3-minute chart. Let's go. Go back to the open. Here's what I was waiting for. Okay, you had the gap down, another huge gap down. Look how many times we gap down here. Gap down, sideways, continuation. So anyway, I was like, maybe we'll catch a cute little trade here. So gap down, started to roll back up, and then I saw the gold miners going a little nuts at GDX. I thought maybe they were indicating somewhat of a move up in gold. So I started buying right around 54.20, and I said, you know what, I'll give it to 53.60 or 153. Sorry, let me put this over here. Sorry, let me get this over here. So at least there was a strategy. Okay, there was, here's the gap. The gap starts at 154.15. So I started buying a little bit in here, and then I added once it broke above it. Didn't really get much traction. But then when the market started to rebound, it gave you a move almost up to 155, which wound up being, if you bought here, not a bad trade. $1. I know it's not saying a lot, but $1 could have made your day if that's what you went with. And then if you would have drawn your line, okay, like just say this somewhat of an uptrend, so to speak, from the morning, and then you see this wedge. Once it broke right here to the downside, that was the trade. It was over. So you trade from 10 o'clock all the way on. Maybe it would have continued and filled the gap, but it didn't. But also look where it stopped. Okay, you also always have to know where the prior day level is. So if you go to the 8-minute chart, you will see. Look where GLD went to. Okay, look at yesterday's low. It was right here, right? So look where it touched. It touched yesterday's low. So that was an area where you just said, okay, even if it's a piece of junk, maybe it gets to retest that. And I remember talking about it during on my radio around 10:30. I'm like, maybe I'd be happy to see 155-ish. And the reason why I came up with 155 was because that was the area of support, and support turns into resistance, and that's what it turned into. So with that said, nice little trade. So the moral of the story is when you're trading during a corrective phase, you look for trades and you take it, both long, both short. Even in the afternoon, I did that cute little short, around 136. It was good for 30 cents. But again, that's what we're looking for. We're not looking for meaty, sink your teeth in trades where you're going to hold it for multi-days, unless you really have conviction that we're going lower. We're going to be testing 1340 or 1320 or even lower, which I still put a high probability that we do. But I don't need to, be just rolling shorts in and getting huge size. That's not the way I operate. I can be quick, I can be nimble, like a little sports car, both long and short, and only taking the trades that really make sense. And there's been a lot of noisy trades. It's been very easy to get frustrated. It's been very easy to trade during lunch and give away a lot of your calculated morning trade. Don't do it. Take a few trades, make sure they're the best setups, and then sit on the side and just watch, do something, play. I don't even know, whatever it is you do to take your mind off it, like have one eye on the market and get your hands off the keyboard so you don't feel like you always need to trade, because in this type of environment, you have to just take the very high probable trades with the best setups. And you do get them a few times a day, and if you take them a few times a day, you'll make money, you could add it up, and in this environment, when we're just looking for these little type of 80-20 red dog reversals, for cash flow, the reason being because it's calculated, it's a counter trend trade. And then you could do it the other way also. One of these times from a lower level that is low enough, it'll make sense and it'll turn into a multi-day trade. As of now, the oscillator still is only like -30. We're not even like -80. So if you're going to try and do the cost average game because you think we're that oversold, we're not there yet. So when we're -30, you trade a level versus a level. You have a calculated plan. You look for cash flow. And if we do get to the extremes where we have a big down day, we close in the dead lows, we're drastically oversold, then maybe you get a few days to the upside. But until then, just take trades, both long and short. Don't have opinions, and just try and trade the price action and listen for these headlines, because these headlines, are a bit troubling. And Europe right now is definitely not going away anytime soon. So we'll take it as we come. This has been Scott Redler, T3 Live, the recap, see you at the morning call. Have a good night.